Okay, well, welcome and thanks for joining this session. This is Weather and Storm out Treasury and Working Capital Leaders Managed through Volatility, and it's going to have a supply chain spin to it. You use Slido again. Here comes the QR code. So Slido is going to be up for this one, and we'll make plenty of time to take questions from that. And don't forget, if you've unmuted your phone, mute your phone. We have two folks with us today. We have me and Mark. And Mark is down there from PrimeRevenue. And what we're going to do, what I'd like you to do, starting with you, Mark, sort of introduce yourself, your role, your responsibilities, your perspective on the topic, and the fact that you're a refugee from the FX market.
Sure. So my name is Good morning, everyone. So I've been PrimeRevenue since 2017. Prior to that, I worked in banking with dominant markets for long markets mentioned. I currently look after sales and funding for PrimeRevenue. So I work with our customers and I work with banks to provide funding to our customers through their supplier finance programs and single debts. Quick high level of the topic. I've always been a believer. I've always worked with traders, pretty much my whole career. I've worked with people dealing with risk in their business, principally financial risk, and whether it's foreign exchange, foreign capital. I'm a strong believer that Treasury is strategic as you want it to be, and it's really up to the individuals within that Treasury department to make that Treasury part of the strategic conversation. And the reason I feel that's so important is because the risks you need to manage are fundamentals for business, and they're also controlled to an extent. And when you are staring into adversity and volatility, the difference between people who can see a path through that and those who can't is an ability to grab hold of the things you can control and try to exert your influence on it. So, great to be here, and it's a topic I'm quite passionate around.
Yeah, and I think this is going to be an opportunity to sort of talk about something that's fairly technical as it's supply chain finance, but also like really a lot of jobs to become a treasury leader and sort of demonstrate leadership through this storm as for those of you who follow the U.S. are aware. Binay, do you want to sort of talk to your role, responsibility, company, way about that?
Yeah, sure. Hi, everyone. This is Binay. I'm the Executive Director of Finance and Enterprise Risk Management in Arçelik. My company is an licensed company, and number one in Europe and number two worldwide. So we're producing in 45 different countries with 45 different QRCs. It's a 12 billion revenue generating company. I am running the departments like Treasury, FX, Corporate Finance, Investor Relations, Enterprise Risk Management, Trading Receivables, and Insurance. So I think that is a nice mixture of risk management along with financials as well. And, operating in many countries, including some emerging funds, that really necessitates the optimization of the cash liquidity and net debt as well. So sometimes we can manage the risks that we can have and that you can guess on, but sometimes there are black swans in the market that we cannot even control. So we're trying to balance our position in terms of currencies, fixed, even environmental issues as well. So I think depending on the title of the session, it is very important to position treasurers with risk management. So I think that treasurers are becoming more strategic in the rules, because you need to have one interdependency with the other departments like procurement, like logistics, like tax, even like risk management. So I think it is a little bit more holistic approach nowadays than the treasury stage.
Yeah, well said. Thank you very much for that meeting. And I think, the way we're going to take this session on is sort of theme is that the current treasury environment is volatile, to say the least. Some of that is the geopolitical environment, some of that is the, instability brought about by tariffs, and it's a challenging thing to be. And it's created leadership opportunity for treasurers because, Treasury sits at kind of the nexus of the corporation. I mean, it's a knowledge business. And, but it also is an opportunity for strategic treasurers to effectively manage working capital, which is where some of the expertise in this section is. And that's a, kind of a long-term project. So, Mine, let's go from the many, many things that you oversee to sort of your working capital journey and sort of where are you and what role, if any, is played by supply chain finance and what you do?
Now, well, my company has been very acquisitive in the last decade. So which means that we are acquiring some companies, local ones, global ones. It means that they're merging a lot of different cultures in different currencies. So it means that the management is better. At least the visibility about how much cash we have, how much debt we have with the world is an issue itself. But for working capital, we are quite large in Turkey, as you could imagine, with a high interest rate environment. And the home appliances business is a very much capital-intensive business. So we need the working capital everywhere in the world. So it means that if you do not have a control on the need for working capital, it means that you need to utilize short-term products, which are booked as loans in your balance sheet currently, and that does not really have rating agencies approach because of the short-term nature of the debt, and also it increases your leverage, not that bad too. But with networking control, you can have some tools. So supply chain finance is a very strong one. Well, it sometimes takes time to convince all the procurement team to convince the suppliers, but when they see the outcome and they see the benefit, because it's a win-win situation for the company and suppliers at the same time, it helps a lot in your visibility. It's beyond traditional financing tools, because it gives you more data-driven approach. You can decide because you have already your track record, you have the data. And when you apply supply chain finance in one of the countries, you have the best practice within your hands. So it's also scalable. You can copy and paste to the other countries, of course, if the regulation allows. So it means that you can offer discounted rates to your suppliers. And if the rates are better than the rates that they can have themselves, they are happy to be part of the supply chain finance program, and in which they offer longer payment terms to you. So that's a good negotiation point. A strategic story for me. When we made a huge acquisition last year, we realized that the previous company, Heritage, already had their supply chain finance program in the region. And we had some common suppliers, so both Heritage had different payment terms. The only reason was the supply chain finance program that could be offered to the same suppliers. So it was a really low-hanging fruit. It was a quick win for us to approach the suppliers and onboard our own Heritage companies to the same supply chain finance program. So we had the data. It was quite, amazing to see how the improvement was easy to achieve. And it was really, in a short period of time, it was on the books because it is well received by the auditors as a balance sheet solution.
Yeah, but let me ask you a question. You mentioned earlier that you need to get a bunch of different functionalities on board. They're killing people. I mean, You're sitting there, they're in their own little country, in their own little world doing, their own little thing. I mean, how do you get, that's a matter of persuasion, isn't it? That's leadership.
Yeah, that's correct. Well, maybe we're lucky because we're doing the procurement from the HQ. But we have procurement guys all over the world in each subsidiary. They're managed separately from the HQ. So it is much easier for us to take the decision. And person from Treasury, a person from procurement, so the CFO, and maybe CEO, that we are all together in a room, we make the calculation, we give the decision, we give the instruction for the field, so they can approach the suppliers. Data is very important because doing all these stuff separately gives quite agility to give the decision and to do everything needed in the field.
You're very lucky to be centralized. Not everybody is quite so lucky. But again, leadership is leadership. Mark, you mentioned the prior life in FX management, then there's your current role in supply chain finance. Which of these areas is likely to be most impactful in the current environment, FX or supply chain, keeping in mind the volatility and the need to demonstrate leadership?
Okay, so when we talk about a volatile market, that leads directly to the currency market sitting in volatility, which is a measurement which feeds into options pricing and the way that businesses protect their through nature. So where volatility is high, there are particular structures we use which actually have a selling volatility which gives you benefit. Now, these things all sound super complicated, and it's very easy to kind of back away from them. And I'll always encourage traders to kind of work with their banking partners, work with the people that can operate in the market, to take their time to be more active and to understand, the ways in which you can manage that risk, and don't let the accounting govern the economics. I'd say that's super important for a trader to try and be commercially understand what the risks are that you need to take as a business. Most businesses have to take some risk to get a return. So you need to understand that dynamic of your business and what's acceptable towards level to make the most of the tools that are available to you. Where the capital improvement is the same. You need to understand what the dynamic of your business is. Mina is talking about a culture which is quite more suited to supplier finance, because you've got centralized decision making that filters down more effectively. For example, there are plenty of examples during this room where I look at them where that dynamic between treasury, procurement, finance is really complicated, and there's a cultural aspect to a business you need to understand and to be successful with PrimeRevenue or edits, because it's people that actually all these things, supplies, they would be the ones impacted the balance sheet. There's a question here about how much of balance sheet finance tools. I think the term of balance sheet is actually quite misleading, because everything that happens in supply chain finance is right there to see your balance sheet. Your payments increase, your cash increases as your payment terms get longer. And if you're disclosing your SCF properly, there'll be a component of your payments which is due to a finance institution. So it's all there, it's not balance sheet. It's just that financial component is counted as a debt or leverage ratios. But these things can get quite complicated. You need to take time to understand them. But that cultural aspect, understanding how decisions are actually made, where the power lies in the organisation, you make sure it's kind of another part of the business. Procurement can be an extremely powerful part of the organisation. If you go to a food retailer, a commercial organisation, it's incredibly influential, and they run things to take our action. And you will see varying degrees of influence of that organisation, that part of the organisation. So as a treasurer, you really need to understand that. You need to understand how to get results in that part of the organisation, and then often that's a cultural change that needs to take place in terms of cash culture and building and understanding around the importance of cash in the business, where typically procurement has been very focused in its financial metrics and margin.
So that point, there's a lot more to this whole thing than one would expect. So let's take a list. Let's think about implementation. And you're in a volatile market. Is it a smart thing, a career thing to say, hey, boss, I really would like to do this. It's probably going to take us, between 12 and 36 months to fully implement it. But when we're done, it's going to be a thing to behold. What is the implementation timeline for PrimeRevenue and supply chain finance?
So we work to a 90-day implementation process. That can be anything from 60 days to 2 years, depending on the organisation, obviously. And we have a varying degrees of, when we talk kind of start to end, there'll be unvarying degrees of success, drive, motivation within our client base. We have to operate at that pace. But if you go to your boss, if I speak to them and say, I want to invest an absolute ton of resource and time into this thing right now, we're not going to see the results for 2 years. Right? You might struggle to get that sign up on most projects.
Yeah, that was exactly my question. Did you, in fact, first question for you, do you agree with, for that, do you agree with this timeline to implementation? 60 days to 2 years?
Well, if you are trying to implement the European countries, it might be quite shorter. But sometimes now we're working in different countries and other European zone as well. So these countries might have their own issues like regulation, documentation, that might take longer time. But I think that we already are about more than any European country towards a project finance program. And I think 6 months could be a realistic one.
Okay, sir. Boy, you've been a bunch of diplomats, really. It's a compliance critical task, and many of these projects at Treasury are compliance critical. So, how do you determine who gets to participate, and what do you do with the leftovers? Mark, you want to take this one first because you probably have a database of clients you've worked with over the past who could advise a prospective client. Is that something that's the case?
The key repeat first part.
First part is compliance.
Question.
No, that's my job. Okay, don't do my job.
I should take my boss.
Yeah, it's the key. Anyway, what do you think is it's a compliance critical task? And so, how do you determine which countries could participate, and how would you advise people, and how do you sort of generate that information?
Yeah, so that is just moving. It's a moving target to the way you can't operate sometimes. So we can, in theory, operate in most countries. There are some where it's little things which can scalp you like. Some countries have 8 digits in their bank account, and some countries are standing up 9, 10, and some have way more. There's little things that can throw you sometimes just in terms of how the systems work. All this people find a way. What we need to have in those countries are banks who can provide funding to support those programs. Compliance issues how to take care of itself, to take the countries can't operating to the extent you have. Countries you definitely can't operate it, and that's very clear. But around the fringes, particularly in Southeast Asia, and then in Asia, just I say then generally. Each country is very much paddles its own canoe, to be said in the UK, which means that those regulations can be very, very different. We need to rely on banking partners to have done the due diligence themselves to make sure that they can operate, but also that we as a data provider, because we're not a financial company, we as a data provider can operate, and actually where data sits, Turkey is a great example, where your data sits on your servers can be a real issue for certain countries. You have to be very careful about how you manage that. China is a good example. If you're looking at domestic program in China, you have to be very careful about where the data of your provider sits, like banking and platform provider.
Yeah, it's come a long way. I mean, it used to be sort of perceived as mumbo jumbo, very scary and spooky and risky, and with bad shoes, it's coming over. And me and you agree with Mark, or are you sort of skeptical? Kind of whoops itself out as that. That's what I heard from.
Well, I think it's quite straightforward, but as all of these tools that we implement, of course, that might be quite scary at first. But when you start to live within the supply chain financing programs, which we have multiple ones in different countries, it is really straightforward. I think the most challenging point is the liquidity ratio part, because that is something that you might not be controlling. So your eternality to take also dedicated to such stuff, you need expertise in that. Rather than this, regarding the regulation in some countries, we even see policymakers to make sure that we're good to go. Because as Mark mentioned, there might be some regulatory issues, data privacy issues, when we're not 100% sure about the auditor, about regulations, and of course we're not proceeding. like I mentioned, is a good example. It is not possible to work across the board right now under supply chain finance program. But if you have local suppliers, it's always possible to dive in scale as well. So I don't think that is such a scary tool once you implement, because we have many best practices. It has already been done with many multinational companies. I think we have good examples in the market.
Well, you opened, I mean, that's a good answer, but you also opened up another question, which was the integration with IT.
Yeah.
So when you do that, you have IT under your sort of supply chain. Okay, how do you do that? Because, you know, they can be tricky to deal with very temperamental people in IT.
Well, the thing is that the system really works on chat, right? Because when you see that, you're gonna save some money. And when you are working with the procurement guys, you have a peer power to talk to IT guys as well. So it's all about showing the game to the front line. So it's so obvious that's gonna be very nice for the company finance.
So procurement falls in love with it, and then between you and procurement go, you beat up IT.
Yeah.
I mean, you know, you got to use visa with them jumping. You know, Mark, is that something that, you know, get PrimeRevenue, do you have an ability to outsource smooth things over to implementation with IT?
Yeah, I'll read out a pitch.
I'm not asking you to just trying to, I asked the question.
That's basically a redress instead of pitch for me. But we have a very light integration. Like we extract very few fields of data from the ERP system to kind of do what we need to do spotlights and nothing else. We don't kind of feed into the master data. So that the implementation can be a relatively light list. It depends on the number of ERPs, the number of systems you have to do. We just need to, from an IT perspective, it doesn't have to, it will never stop us, but it can dictate the time. So we're in our implementation at the moment, which we closed, we were mandated in March, April. We probably won't go live to December because the IT implementation process has been very, very long because they've got 59 projects and we are on one project they're working on. Maybe picking up and dropping out.
Is it an extract? Is it an ETL extract transact load, or is it an API call to get that?
It's up to the customer.
Okay. Are you seeing a lot? I mean, just curious. Are you seeing a lot of action on the API front? Is that becoming more common?
If you don't have an API option, customers are very, very upset about it. I'm yet to actually see a customer choose API connection for the business to do. But it's just that SFTP most days.
Yeah.
Just in reality, it's a lot fit for purpose right now. That'll change, we'll see over time, but we're ready to do that. But take up an API connected to that's quite a lot.
Yeah, I'm curious. And audience, let's just do a quick question here. Do you think APIs have been oversold? Yes or no? Yes. And oversold in just everything for, you know, aside from balance reporting, they are oversold. Yes. Okay. Well, no. Anybody think APIs are all here? I was unfair to people. I'm just curious about that. One of the things that, you know, so what are some of the key lessons you've learned about supply chain finance and sort of doing some of the general projects that you do that can be applied by other structures? Where do you find the biggest benefits? I mean, you alluded to it in getting IT on board. You said, you know, you have an irrefutable business case. Is that sort of the standard playbook?
Yeah. I think doing all the preparation steps with that buffer in timeline could help. But I think at first, you really need to see the benefit of the bottom line. How are you going to have longer payment terms? Why is it market practice? Because there are some companies even showing you that your payment terms are in line with the market practices. Or you have shorter payment terms, longer payment terms. So you need the data before you start the implementation, because it might really take some time and effort for IT, finance, accounting, it might keep the teams busy for quite a while. So I think it's important to see the big picture beforehand. What's your target? What's your bottom line target? But I think it is so nice because sometimes when you're working with platforms like PrimeRevenue, I feel that we outsource portion of our workload to people in PrimeRevenue because they're working on behalf of you. They're approaching the suppliers. They're doing the calculations. So it's that, I think, good partnership. So it really pays off the effort. So what I would really do differently, maybe not to be in a hurry to onboard the entire subsidiaries at the same time. So one step at a time would be a better approach. Sometimes we get quite excited to do everything at once. That made some internal processes quite complicated for us. That's my list to start.
Yeah, well, you could translate that to just about any Treasury project. You know, don't be in a hurry to get it done because there are all these little stages or bumps in the process. You know, Barbara, let's just change directions with you for a second. But you know, in our earlier discussions, you were talking about being a strategic treasurer, you know, to it all to learning. So what do you mean when you say this particular opportunity, supply chain finance is an opportunity worth it? How can you sort of, don't sell your company, but sell the concept?
Or saying that I think the promise of supply finance is that you solve a big problem, which is an age-old problem. I mean, it's the friction that's caused our timing of payment. Like buyers want to get to pay as late as possible. Suppliers want to get paid as early as possible. That's always there. This solution can take us off the table, which means in terms of the relationship you have with your suppliers, there's a whole string of benefits you get without even looking at the more overt working capital improvement project you might lead to supply clients. Just putting it in place just takes that point of friction off the table, and that suppliers have the flexibility to get paid whenever they want. They have to pay a discount to get that early payment, but they're already paying for the management of that working capital down to wait. Their services provided when they pay for them. So this is hopefully a real efficient way to do that. So there's that and the more publicity massively improve your supply relationship. We do see that as a real net benefit. Now, when it comes to the working capital improvement for a buyer, and you say, okay, right, we would like to be able to pay our suppliers way later now. I think where this becomes strategic, where it hasn't been in the past, where this now change is that supply finance gives you the opportunity to make material improvements to your working capital, which are not just a tick box and Treasury. They kind of, we got 20 million, the next go and find 200 million and make this a really important part of our capital relationship. You know, if we can avoid going to market for that 200 million, we can actually extract it from our business. That's a super efficient way to manage yourself, and it's permanent. In terms of, you know, when you make those changes to your balance sheet through those main terms, through that aspirate cycle, that's there to say, you know, the supply finance itself does nothing, but what it does do is allow me to make those changes without causing an issue for your suppliers.
Excellent. You know, Mina, you agree with that? Is that, I saw you nodding your head. Did you want to add to that, or is?
Yeah.
I mean, for example, let's put it another way. Is the CFO aware of the significance of your contributions of that, and therefore more prone to you to listen to you when you come to them with other ideas?
Yeah, I always have good ideas.
I know, I understand your ideas. Does the CFO know that?
Yeah, he's completely aware, I guess. Well, the thing is that especially in some of the countries, there are sometimes issues having access to liquidity. Even if you're ready to pay the cost, it might not be possible every time. So with the supply chain finance program, in fact, we generate a pool that can be accessed in case of emergency with different intensity. So I think it is nice to have a second option there, even if we use or not. But of course, it is always beneficial for us to offer the suppliers the better discount rates. As the mother company, even provides corporate guarantee to top our supply chain finance program to better discount rates for the suppliers, and that they have access to these facilities. Of course, we can pay in longer terms, and we can keep the liquidity as long as possible. And when you are doing pool and cash booking like me too, you can switch your cash from one country to the other, where you have better deposit rates as well. So it allows you in terms of maximizing your interest cost, interest gain, liquidity, working capital. So I think it's a holistic approach to the supply chain finance management.
Excellent point. So you actually adjust your pool rates depending on brilliant.
Yeah, I already told you I have always good ideas.
If I were smart and didn't ask stupid questions, if I moved to Europe, would you have good ideas? You wouldn't. But let's we're about moving right along in the time. Let's open up Slido, and I saw a really good one that hasn't gotten a lot of votes yet. But our company, saying it please.
No, second question up.
You want the second question? Okay, because I was going to do the fourth, but go ahead with the second question, Mark.
So second question, how do auditors view short-term loans, SCF? These accountants' deck. So if we look at this from an accounting perspective, we think about the balance sheet. Okay, so when you move your payment terms, your payments will go up, trade balance will go up, and your cash will go up. So that's the two slides there. So that's where the benefit for a buyer comes. It's nothing to do with financing. If your SCF program is run properly and managed responsibly, the SCF is there for suppliers if they choose to take early payment to manage that change in the payment terms, which drives benefit in your loans. So that's where it's, I said it's a bit of a misnomer, the idea of being off balance sheet. That's where you see SCF in the evidence of SCF balance sheet. And if you're disclosing things properly, then when you look at trade payables, there'll be a trade payables balance due to suppliers and a trade payables balance due to financial institutions. And there'll be a kind of paragraph on why that's the case. So the reason that there's no loan there because it's not a loan that's actually driving the improvement for the buyer. It's changing payment terms with the SCF just as a backstop for those suppliers. And if the suppliers are choosing to enter into those agreements, they're doing that completely independently of that buyer. There's an agreement with a financial institution, and then to sell their receivable, that financial institution will step into the shoes of that supplier on the same commercial terms as our supplier. So there's no subordination in that transaction, and that is the core of the accounting.
Well, that just bleeds into the second question, so you could do that one as well, which is, how much off-balance sheet financing tool should be utilized, or what are the implications? I mean, is there, or actually, Mina, you get this one first. I mean, is there such a thing as too much?
Well, we use off-balance sheet financing tools. As Mark mentioned, supply chain finance has nothing to do with loans. But when you keep your cash for longer, it means that it increases your cash and equivalents. So it decreases your net debt, which helps the leverage. So it's a good opportunity to keep the cash on the balance sheet as long as possible. So it's not a kind of off-balance sheet financing tool. But like receivable factoring, which is an off-balance sheet financing, it will be used a lot. And we receive a lot of questions from the investors and lenders as well. We're a publicly company company. So it is always a question. But the thing that you discount is your receivables. So it's already an asset balance sheet, which could be collected earlier with favorable interest rates. So I think it's already very well received by the lenders and investors because it also shows the strength of your balance sheet and funding of your receivables as well.
The ability to discount and not discount. And is that a regional thing? I mean, either you're a Turkish company, is that something where the markets have become more accepting over time, or has that been a...
Well, half of our revenue comes from Europe, so I don't think that we can still describe my company as a Turkish one. In Turkey, it is still, very welcomed, but due to high interest rates, we cannot be virtually the Turkish markets. But European markets, even South Africa, is quite, I think, used to all these tools. So they're already known by the banking authorities in these countries. So we do that almost in any country.
Excellent.
Yeah, there's all that very quickly. So I think what we'll see with our customers, particularly our rated customers, is a sense of proportion. If I can bring it back to the foreign exchange piece, where when you look at hedging, most hedging portfolios are balanced. There'll be spot, but before there'll be options. There'll be different types of tools across that, and you'll have a balanced portfolio. You won't necessarily palm into one type of thing. And it's just similar with this to the extent that most of our rented customers will be very, very conscious of the size of the SCF facility relative to the rest of their financing. And there's various metrics that will be applied in terms of the limitation on that.
Great. I think we got that one pretty well done, pretty well picked. I still like the last one here. I just want to come up with, and by the way, we have time for more, so please, keep them coming. ESG is starting to get a bad name among some people. It's like DEI, yeah. I'm not even sure I could say it anymore. I mean, things like that. Is that declining in fashion, or is that still an important thing? So can you see companies implementing supply chain finance sort of promote ESG targets, including other vendors who might not normally be included? I don't know if either one wants to take that question, whether we did skip it.
No, I mean, we were very, very focused on this topic up until Russia invaded Ukraine, and this, in particularly Europe, we probably deprioritized. I think it's a great idea, probably deprioritized. I think the efforts that decarbonize, the big driver that we've seen is an effort to decarbonize supply chains. That's still ongoing. And a lot of our customers are still very, very committed to that. I don't think SCF is the kind of the horse and the cavalry on the horizon that's going to make a huge difference to those efforts. So I think it can be part of the solution, but I don't think tier pricing and CL program is necessarily going to move the needle in terms of the decarbonisation of supply chains. But we're thinking differently about how we put that in place in a more holistic way across the supply chain, not just the suppliers that might choose to use SCF.
Yeah, I think that's a nice way of saying it shouldn't be your primary tool for achieving ESG. Certainly, it's something.
But don't get me wrong, we got really excited about it for a while. But it's not what it's on the way.
Yeah,
it's a much bigger problem to solve than 5 basis points on SCS. Okay.
Exactly, but I think it's a good motivation for the suppliers because we have a sustainable supply chain finance program already in Turkey with dynamic discounting. So we also do dynamic discounting with suppliers without cash. So we already implemented a sustainable supply chain finance program. So we offer better rates to suppliers that be great and sustainable. So we have a ranking. So we offer better interest rates that would be quite encouraging because green transition of companies like ourselves is not possible anymore. If you cannot make your suppliers to a similar transition, it's possible by acting very ambitious on your targets. So it's going to be a complete transition as an industry, and suppliers are a big part of that. So I think it's encouraging the suppliers to be part of the program with better rates. So for the ones who are already tagged as green, because we have been collecting data from the suppliers over the last 8 years, we have the data. So it's also, again, a sign that we're going to keep them with better rates. They keep doing their efforts, their transition targets.
Well, you guys have the ultimate micromanagers to adjust rates. And cool, you adjust rates of just. But I mean, it came to me. How many people do you have in your treasury?
It's 33.
Okay, that's pretty. Yeah, you have a conventional TMS.
Yes, you would.
Okay, and you. All right.
Where's the pad?
No, I would rate that as very sophisticated. I mean, you know, sometimes the leadership at Treasury, and I have to be careful how I say this, comes from surprising markets. One of my partners likes to joke that some of the best Treasury managers in the world come from Latin America, because when you manage at hyperinflation, you really understand Treasury. But yeah.
So maybe we had to, do something out of the box because of high interest rate and volatility. But Turkey is under high inflation and inflation accounting as well. Yeah. So it's, really makes you in a position that you need to do something different.
So hire Turkish treasurers. That's a good idea.
It's also ESG super broad as well, and resilience, supply chain resilience comes into play when you think about it. It's not just about thinking about how do we go on that green journey with our suppliers. It's about how we mitigate the issues that we are now facing to climate change in terms of how that impacts our supply chain to the market. So. And then supplier finance has a big role to play there, because when something goes wrong, you need cash. And things, what we've learned in the last 5 years, things going wrong much more regularly. And it's always it, did it?
And to see another tariff sending, another tariff sending, beautiful. Some of them are beautiful than others. Okay, we'll leave that one alone. I think the one of the question here came in on onboarding, and they go hovering a CF platform. I mean, is that something where they come to you, Mark, when there's a problem, or is that something when they come to you needing a problem? Who do they scream at?
So suppliers will always come to us. We have a relationship with that supplier comes to the boarding piece. So ideally, what happens is that liquidity will be focused entirely on their payment negotiations or whatever the initiative that they're driving with their suppliers. And then if that reduces any club suppliers to us, then we manage that. And that should be what you should expect, right?
We didn't have anything to add to that. That's a good idea.
Yeah, the only thing is that sometimes procurement team approaches really, and they want some of the suppliers to be convinced to be part of the supply chain finance program. So sometimes they need some technical support and briefing. Yeah, that's the only situation that I think on the team.
Yeah, and that's a big part of our process. Again, ideally, and providing is will be helping to to build champions with the organisation, and you can go and have those conversations. But then you've got a back solid team who are
We're coming to our time, and what I'd like to do, Mark, you first, sort of, what's the thing that people should take away? If they were going to do one thing as after coming to this session, would it be, take a look at the various programs where you can have impact, but don't be afraid of long-term implementations. What would your advice be?
Go and have conversations. Go and have conversations with providers, speak to your banking partners, come speak to our team, obviously. I would say there's an opportunity, there's an opportunity to lead when there's things you can identify that you could drive. And this is an absolute controllable within the kind of the gap here.
Mina, the last word to you.
If there is a best practice already in the markets, I would suggest just copy paste. So I think it's the best way. Then afterwards, maybe it's nice to fine tune, which is quite aligned to organizations' targets. But if there are good solutions in the market, I think it's good place change beyond other corporates.
Okay, I'm just going to a word of advice here. As a consultant, we never talk about copy paste. We talk about leveraging intellectual capital. You could know more what you're saying. But anyway, we are at our time, and there is lunch coming. So you guys have done a great job. Thank you very much. And next year, Arçelik.